Nike crushes earnings. Coming up here on the Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:45 here in the middle part of the country on Wednesday. It is December 21st, 2022. Here's your morning jog around the economic headlines of the world. Want to start off with Nike, and they did fantastic in the third quarter, folks. $13.3 billion in revenue, including like a 25% year-over-year increase in Nike direct sales, right? They get all of those margins when they're coming direct from their website. That makes a difference for the retailer. Now, listen, I was told that nothing in the economy was getting better. Consumers didn't have any money to spend, and interest rates were going to kill all meaningful economic activity for 2023 and beyond. Turns out that's not the case. Turns out folks still want to buy sports gear for their kids, and Nike tends to be the major beneficiary of that generational trend. Now, on a go-forward basis, I continue to see strength in this sector. Let's be honest, folks. All of the hubbub about the economy and the stock market and the bond market does not affect you buying your grandson some Air Jordans. Do you want some for Christmas? You're going to get them, and doesn't really matter that much how much interest rates are. On a go-forward basis, we continue to like the sector, continue to like the name. Listen, don't worry so much about the gyrations of the market. You still have companies that are making money, and if you buy them, whether you buy them when the market's low, when you buy them when the market's high, you continue to reap those profits over time. That's what makes investing great. Canada, inflation. Let's talk about it for a little bit. 6.8% came in a little bit hotter than analysts expected, 6.7%. But overall, we're tending to see inflation topping and sort of rolling over. It may stick around for a little bit longer, and that's why we have higher interest rates. But in the real economy, we do need reinvestment here in the United States. We've talked about trade patterns shifting back to the US, and that requires capital investment, and ultimately that's inflationary. So while I think that we have seen the end of the COVID-induced hysterical inflation, we still have some structural factors that are going to continue to support inflation here in the North American continent for a number of months and years ahead. That is something that the Fed does not have control over. It's much more geopolitical in nature than it is financial in nature. Last but not least, before we get you off to a nice Wednesday, let's talk about the COVID situation in China, where Pfizer BioNTech is actually sending some German-made vaccines to China. Good for them, helping out folks who need to be vaccinated, as China has completely flipped on their policy. Let's be quite honest about what has happened over the last 2 weeks in the People's Republic. They have gone from severe lockdowns, literally welding folks inside of their homes and watching them burn to death, to saying, guess what? We can't control this at all. We got to a critical mass of patients in China, so they really had to turn the switch. They're just saying, hey, listen, if you are COVID positive, and unless you are severely sick, just keep going to work. Quite frankly, it's not that bad. At least that's what they're saying to the population. It's like, hey, listen, and quite frankly, this is kind of like Rocky 4. If he dies, he dies. That's what they're doing to all the old folks in China, and that is not a great message, but one that will be swallowed by the People's Republic, because ultimately they're opening up for business, and that has a profound effect on things like commodities for 2023. Certainly something that we will be keeping an eye on as China gets back to business. If you want some additional info throughout the week, feel free to find me on the internet. I am out there. Until then, you and your family have a wonderful Wednesday. I hope they are done traveling by the time this large winter front comes in. I am out.